We should be live. Let's get going. Happy Tuesday, everyone. Happy pre FOMC day. It's going to be a crazy week. I think we all are aware of that, or most of us are. And today we're going to discuss this a bit. We're going to discuss what's been leading to that kind of rally. There's, I think, a lot of reasons. There's also probably a lot of reasons on why this could be a complete bull trap, why those that think this is a bull trap are going to be completely wrong, and we're going to see 40, 50,000 soon, and maybe Balaji's $1 million bet in 3 months or something is going to be correct. So I do think a lot of potential outcomes are going to be on the table. So we're going to be discussing this today together with Fabio. Fabio, welcome back. We missed you last week. How's it going? And give us a bit of the sentiment in the community.
Yeah, crazy times. It's a never dull moment. Like we have these times where we go sideways and nothing really happens, and we had that for like a month or so, and then out of nowhere, it's complete madness again. And I kind of live for times like that. Like the stuff where what my dreams are made of is banks are dumping and Bitcoin is pumping. Like I'm dreaming about this stuff every single night. This is what Bitcoin initially was intended to do, and what was made for. And I personally, I always I'm team decorrelation. I'm always waiting for Bitcoin to decorrelate from risk-on assets. And there are some very few moments where it did, and every time I think, okay, this is it. And now I have a this is it moment again. Of course, I don't really know if this is going to be sustainable, but the first time that we experience a sustained period of decorrelation is now. And I guess it took some people by surprise. It took me by surprise. And I'm team decorrelation. And I still don't know 100% if this is something that is going to be sustainable or if we are just going to peg to risk-on assets again. But there's definitely super interesting times. What's going on with all the banks and especially, the Fed is at the center of this, and maybe we can start with that a little bit.
Yeah, sure. I mean, last week's. I mean, I know you listened in last week's live. We talked about obviously the market, how everything came to that. I talked about elite. I think today we're going to turn this a bit around. We're going to talk probably 80% on the market, 20% on products. So I think this makes a lot of sense today. So I think let's kind of start from that basic. So we assume that you listened to last week's either space or you watched the video, and let's discuss kind of going on from there. We discussed the backstop. We discussed the $200 billion. We discussed that the Fed balance sheet with that kind of jumped up by 1/3 of what it kind of drew down over the last year. And I think that's what we can discuss. I think what are new things that have developed since then? Obviously, the price definitely going up by, I think we can check this out, but I would say just a gut feeling, probably another 10, 15%. Yeah. Bitcoin up 16% since then. Altcoins lower. So altcoins between 5 and 10% since then. We have seen that bet from Balaji. We have seen obviously a lot of discussion on if the Fed is going to actually raise rates tomorrow. So I think these are key things. I don't know if there's other things that I'm missing on this. Obviously, that story on crypto being unbanking basically the people. So I think these are topics. I don't think we need to repeat how this banking crisis kind of got started because we discussed this last week. Do you want to start, Fabio, like with the things you see?
Yeah, sure. Maybe, give me 45 or seconds or a minute to just summarize one or two things. So for everybody that's not aware, so this is an overgeneralization, very, very general. I'm going to keep it very, very general. So the Fed has two tools to influence the market. They can hike and lower rates, and they can unwind and increase their balance sheet. And they can do both at the same time. So they can have high rates, but unwind their balance sheet or buy back their balance sheet. So right now the balance sheet is increasing, but the rates are high. So these are the two general tools they have to influence the market. And you could say that we already are a little bit into the easing again because their balance sheet increased drastically. And then the other thing is all the banks are in a very weird nirvana situation, because I would say of arrogance and bad risk management, where they locked themselves into treasury yields at a very low rate. The Fed increased very, very much in 1 year. So we have, like, last year you could get a 0.5% yielding treasury bond for 5 years. Now the same yield is 600% higher, 700% higher at 3.5%, meaning you're locked into the old product and you cannot get out. Yeah, sure, you can get out. You can put it on the market and try to sell it, but nobody's going to buy it because they can get a better one. And the low cash reserves that the banks have on hand, they kind of lead to this issue that we are in right now. This is an overgeneralization. And so Balaji, this is the ex-ZTO of Coinbase. He went on a limb and he offered a $1 million bet that Bitcoin is going to be at 1 million in 90 days, which sounds completely crazy. And his reasoning for that is practically he's calling out the banks on the issue I just explained. And he basically says everybody's insolvent, or a lot of banks are insolvent. Everybody has that issue. And I guess so I listened to a very interesting talk from Raoul Pal yesterday. He was at Anthony Pompliano's podcast. And what Raoul Pal's thinking on this was astonishing to me, because he practically says that the Fed has a really big issue. He says they're probably going to raise 25 basis points, which I also think tomorrow. But then he says they're probably going to have to emergency cut 100 or 300 basis points in June. That's what he thinks. And I can understand where he's coming from, because if this is going to continue, if we see more bank failures, if we see more insolvencies and liquidity issues, then they basically need to cut rates. It's basically the only solution they have. So this is a bit of a very general perspective, or things that kind of were going on. I'm super interested to hear your thoughts on this, because of course you have sometimes a really interesting takes on these things.
Yeah, dude, I'm gonna send out probably a CEO newsletter tonight if I have time, which is gonna be called 10. Like, what's gonna be the title? Let's see. Got FOMO, 10 contrarian crypto viewpoints right now to calm you down. So it's gonna be a very contrarian take on a lot of things that I think people just relatively quickly throw out of the window. So obviously, if you are a Cake customer, I'll send it out to you. Without going into all 10 of them, I don't think that's necessary and relevant here. To me, the real first question is always causation versus correlation. We see this in the bigger picture when it comes to crypto cycles. People always talk about 4-year cycles. I have always been someone who says this is absolutely not causation. This is just correlation. And I know that I've been wrong on this, and it maybe is, again, I'm wrong on this. I just think those 4-year cycles don't exist. They're just fooled by randomness. Great book, in my opinion. And then the second thing is this entire, like, tying that banking collapse to crypto going up right now. To me, right now, I also don't see that at all. Tech is pumping as well. So tech is the only index that's up this year. So if you look at all the other stocks, they're down. Tech is up. Why would that be if it was about crypto and basically pumping from there? So I don't know. I struggle with a lot of the narratives right now, because people love to put these like narratives together and make two things seem caused by one each other, where they're completely affected by other things, in my opinion. And then my biggest question, all of this right now, is who is buying? Who is buying right now? That is probably the single most important question, because like CoinShares is one of the largest institutional observer of what's happening on the institutional side. They see outflows, right? So they don't see inflows, they're seeing outflows. Again, like this is since the 17th of March. So true, the last 3 days are missing, but until the 17th of March, outflows. So institutions, at least that they are aware of, are not buying. Probably some retail is buying for sure. The question is just who. So I don't know. What's your take on this? Who's buying right now? I mean, I would love to understand. Is it
Um,
those people that need to? I don't know.
it's hard to say. I would say retail is, and the thing, like
That could be.
I personally, we have different viewpoints on this. We already talked about this, I think, last year. I personally think Bitcoin is a safe haven asset and not a risk on asset. Yes, it trades as a risk on asset, but it's just because people, sorry if I say so, are stupid and emotional. And they get scared out of big volatility and out of market movement, and that's why it behaves as a risk on asset and looks like a risk on asset, but it's actually not. It's I think in a case like this where people really get scared and really think about what is my counterparty risk, what can I buy, and you know what I'm going to say. There's, like, in my opinion, there's only two assets that where you're truly safe is gold and Bitcoin in my mind. When to have really that insurance policy against systemic risk in the market, a banking collapse or a financial crisis, I personally feel that Bitcoin and gold are the place to hide. And there is, I guess, a few retail people that think the same way, because if you look at the performance of Bitcoin and gold for the last 2 weeks, of course, there's causation and that it might not be connected, but for the first time in a very long time, we saw gold and Bitcoin pumping while risk on assets and S&P 500 was down. So I would say it's retail, because also if you look at on-chain data, you can really
Again,
see.
Fabio, that is incorrect. I mean, just look at the Nasdaq, right? The Nasdaq, since when did the banking crisis start? On the 13th of February or something. So go back and look at the Nasdaq. Since March 13th, the Nasdaq is up close to 10, not 10%, but let's say 8%, right? Which I get it. It's not up like Bitcoin, which I think is up 40% or 30%. I get it, right? But then compare this, the Nasdaq, right, since March 13th this year, compare that to gold. So I can, you can look all these things up yourself if you want, listening or watching this. So look at gold. Actually, yeah, gold is also up since March 13th, as you correctly said, about what? Also 5-6%. Yeah. So let's say more or less the same. And then let's look at the S&P 500. The S&P 500 since then is down, right? So how does that make any sense? I don't know. I struggle with that. With that statement that risk assets and risk on and risk off move in tandem. I don't know. I struggle with that, because the Nasdaq is as risk on of a stock component as it can be, right? And so I don't know. Yeah, I
It
do
might.
agree. I agree that that narrative is probably really good. And I mean, also, I mean, look at Tesla, right? Tesla is up. Tesla is not up much. Tesla is up 5% since then. How's Tesla up? Like, what? How does that make sense?
It doesn't make sense. But in my opinion, it's here as well. It's just maybe I would say stupid retail money that we overcorrected on the tech side. The Nasdaq and a lot of tech stocks overcorrected drastically end of last year, and they are kind of bound for a rebound. And also, people are, I guess, just looking for. So if we, maybe that's just my conspiracy thinking, but people anticipate a rate cut, a rate pause, a pivot. And what do they think? What does retail think? Okay, if we see a banking collapse and the Fed is going to pivot, risk on assets are going to pump because assets prices are going to inflate. So why not go into Tesla? Why not go into the Nasdaq? Maybe that's just wishful thinking, but I could imagine a lot of retail people actually doing that.
Yeah, well, I'm again, and I really don't have the answer. I wish I did, right? So I'm not saying, again, I'm not saying, like, you can watch my video yesterday, right? I made a video yesterday where I'm just like, look, of course I would have loved to have 100% of my capital right now in crypto and not like 25% of my allocation. So I'm just saying, I'm sitting here and I hear a narrative, and then as soon as you kind of put something out, this is that narrative makes zero sense, because look at the data. The data just says something completely different, right? And then people immediately change the story, right, in order for it to fit the narrative. And so that's where I just always struggle a bit when people say, "Oh, this is like a banking crisis." Okay, and I say, okay, in a banking crisis, gold and probably anything that goes away from banks, let's say crypto, would do well. Great. Bitcoin most of all, right? And we have seen that, which makes a lot of sense that Bitcoin does so well, for the very simple reason because it's, like you said, I think it's the most, it's the that has the strongest brand. Okay, great. Then explain, why is the Nasdaq doing so well? Why is Tesla doing so well? Right? And now we go again, and now it says, okay, but this is actually, and now the story changes again, right? So maybe the story has nothing to do with the banking crisis. Maybe it just has to do with the hopes of there being like money printing that could happen, right? So yeah, so again, and so yeah, so that is just where I have a bit of these struggles when people try to fit, like they try to make a narrative, and then they try to constantly change the narrative. So their thesis, so like if you think about the scientific method, right? The scientific method, you go and you put up a hypothesis and you test it and you look if it happens or not. And then you kind of say, okay, my hypothesis is wrong. But what happens for some weird reason in the investing world in general, because it's a very emotional topic, is that people like put up this hypothesis and then it's clearly wrong, and then they still think they're right. And I just sit here and I'm like, I'm really confused, right? And that's my honest answer. I'm really confused that I think a lot of the hypotheses that I had over the last 10 days, especially, got thrown out of the window and they don't make any sense. And so that's just where I always get a bit like careful, cautious. I'm like, okay, what's really going on, right? Like you look at the data, right? The data says stable coins, especially BUSD and USDC, got sold off dramatically. And you can see this actually, how much it got sold off. The stablecoin balance as a whole over the last 7 days, how do you think it changed? Do you think it went up or down? And then compare this to any other bull run in the past. It went down, right? Not significantly. It went down by like 0.3%. That's not much. But you compare this to any bull run in the past, there was always a stablecoin increase. So it's just so weird, right? So a lot of these data sets, to me, are just really, really crazy at the moment. And so that's just where I sit here and I'm like, okay, something is iffy here. Something doesn't make sense. That's just where I'm like, okay, I'm not saying that, again, I really don't think that maybe the rally right now is absolutely justified. I probably actually think it's more justified than not, especially with what's going on. But I would be super cautious in drawing conclusions right now on, oh, crypto is good for like unbanking people right now. Bitcoin is risk off. Gold is a good hedge right now. I don't know. I don't know. From an investor standpoint, very tricky.
100%. I fully agree that these times are very confusing and scary, and nobody knows how deep the cracks go. Like we saw a little bit, the main three banks like Signature, Silicon Valley, Silvergate blowing up in the United States, Credit Suisse in Switzerland. So you can kind of see the cracks forming. And the market is just reflecting that. There is so much uncertainty and so much confusion among people. And I guess that would, or in my mind, this is one of the reasons why we see a Nasdaq pumping in the midst of so much fear, uncertainty, and doubt when it comes to systemic risk in the financial system. Like how can one and the other go together? In my mind, I can logically see why people would buy gold. I can logically see why people would go into Bitcoin, because no counterparty risk, something outside of the system. Like these two things make sense to me. The Nasdaq doesn't. And the same thing, like if I look at how people are on the CME side, you can see how much probability people give for a rate hike. And this also doesn't really make sense to me, because I think 3 weeks ago, Jerome Powell said he might going to do 50 basis points. Now 50 is not even on the table. Now we're talking 60%, 25 basis points, and 30% no rate hike at all, and a pause. So there is a lot of uncertainty and a lot of what do we need to do now? And I ask myself the question as well. What's a wise strategy to approach? Especially if I listened to the Twitter space where Balaji with Robert Breedlove and Alex Gladstein were talking about his $1 million bet. And initially, I was putting this bet off as some crazy person. Like, this is, but I'm after listening to that, I would never ever take the other side of that bet. I wouldn't take
What
both
was
sides of
the
the bet.
okay? I would instantly. I even offered to take the other side of that bet, but he didn't. And I said I am happy to donate it. But he obviously at some point, I don't know how real actually his bet is. He says he's betting two people. I don't know, very iffy, very shady in my opinion. Engagement farming. That's just my opinion. But what was the? I didn't hear this Twitter space, so I would love to hear what was the thought process that he shared.
So he basically gave a rundown of he did. I tried to explain this a little bit. So the overexposure that banks have in 5 years locked in products, and what he sees happening is, so all of us, we are uneasy, so we don't know what to do with our money, and we kind of don't want to have it at the banks, and what this leads to practically a flight of capital. So the banks get less and less deposit, because what you can do in America, for example, is you can go to Fed Direct, I think, or Treasury Direct is the name, where you can directly get exposure into government bonds. And you practically can see, okay, you're getting 1% at your bank, or you're getting 3 or 4% at Fed Direct or at Treasury Direct. And banks see that flight of capital, so people are taking their deposits back and putting it in a product, risk-on assets, S&P 500, Bitcoin, gold, and bonds, whatever. But they are getting a better deal than at the banks. And the banks, they practically run out of money. And he's listing, he said, 160 banks found in a study that they're practically insolvent. And he sees that issue happening all around the world. And he practically says, if there is another few of them having the same destiny, then this will lead to like a domino effect and hyperinflation, where the Fed needs to jump in. And then we're not talking about 10 or 20 trillion. Then we are talking about like a complete system bailout, which would lead to and he said, in his own words, everybody should be a Bitcoin maxi right now if this is really systemic, and because it's practically the only asset that doesn't have any counterparty risk, and the only exit that people could take in a very short period of time. And if it's really if the dominoes fall, all of these could play out really, really fast, like faster than most people anticipate. And then there could be this instant flight to safety, and there is not a lot of supply. And if there is a crazy amount of demand, of course, that could be the price spike, probably not sustainable. But and then I could understand a little bit better where he's coming from. But in my mind, it's completely unrealistic. Of course, this is engagement farming. He wants to bring attention to this issue. It's not, and he's very unlikely to win that bet. But he kind of bases his thesis on a lot of data. I just think the time horizon is off by a factor of, I don't know, 100 maybe.
300 months? No, really? Nah, I think that's too much. I think if he would have said, I don't know. I think if he
10.
would have said in the next, factor of 10, I think that's a super realistic time horizon, right? I mean, if you would say that Bitcoin goes to 1 million in the next 2.5 years, I think that's a time horizon that to me is at least realistic. I in 3 months, that's that the capital, the profit taking, the I don't know, that would just, and I don't know, I see this as super unrealistic. Anyways, I also don't want to come across as the, I don't know, Debbie Downer here, who's trying to kind of down talk something, because I really don't. I do see the merits and the value. I don't know. I'm just someone who I'm really I think and people struggle with that characteristic of mine. If I look at something, I had this maybe a really good I kind of give these same examples all the time. I had this grandmaster, a German grandmaster. I think he's the third best grandmaster in Germany, chess grandmaster, Nicholas Huschenbeit, at my place in Singapore. He stayed there. He stayed here while he was in Asia and visited. And obviously, we played some chess. He completely destroyed me. But we also had some nice discussions. And one of those discussions was, around the big difference of grandmaster decision making versus amateur decision making. And like one of those decision making trees was a grandmaster is just always very, very, very sure if that person makes a move that he believes that position is either equal as the position before or better. And and he says 99.9% of the players, they just believe it is better, right? They're not sure. They just move because they think they attack something, or they just don't think this through. And so it's the same as in investing, right? I think right now a lot of people have so much opinion, and probably a super tiny amount in crypto right now, a very tiny amount actually knows what's going on. And so it's the same as you going into a dark tent and you know your position. You know your position, but you don't know the other side's position. And you don't even know who you're playing. And maybe you don't even know the game you're playing. But still, you're sitting here and you're making very aggressive bets right now in this market. And I just always ask myself this, right? Like, who am I playing? Am I playing Nicholas, who is a grandmaster, and I don't even know his position, and I know my position, but I don't even know his position. I don't even know who I'm playing. Or am I walking in a room where I see the position, and even with my basic 2000 elo, I can calculate that I'm definitely better. And I know that the other side is a player that has a 1600 elo, and I'm fairly certain that I'm going to win this game. And so the reason I'm making this comparison is I would really ask myself this. And I sit here over the last week and I'm trying to figure out what's happening, right? I make calls, I discuss with some people. I had this really interesting lunch this week where this person is like actually saying that what's happened with the $200 billion is actually deflationary, it's not inflationary. And his explanation to that is that the $200 billion that got created on the balance sheet are actually performing worse because they are very specific, right? They are short-term credit, and the banks have to pay that back, and they have a higher interest rate in comparison to what these banks have to put up as collateral. So they're actually eating this up. So it's actually deflationary in comparison to what could happen in year down the line. So the question is, in a year down the line, what's going to happen in that process, right? So he says he actually thinks it's a liquidity squeeze, what's happening right now, even though, like, for the economy, not for the banks, but for the economy, rather than an additional liquidity. So he explains this in a complete opposite manner. And so it reminds me of, I don't know, September, October 2021, where I had crypto people who were like, oh, so like fear and greed, super, super high. I completely understand the ideas what crypto has. I also understand these ideas right now, right? And I just have a lot of friends who are just extremely successful investors, not over the last 3 years, but over the last 30 years, right? And so when I talk to them, and some of them invest in crypto, and some of them invest in gold, and some of them invest in stocks, their ideas are just so contrarian to what I hear on Twitter. And I don't know, in September, I think I posted a tweet where I said, like, I look at crypto and I look at some of my really wealthy friends, their opinions are so opposite. Over the next year, one of these groups are going to be completely wrong. I don't know which one. I really don't know. And I actually think right now it's going to be similar, right? And I really hope that it's crypto that's right and that group is wrong. It just, I sit there and I'm confused myself. I I know. I am not 100% sure I understand the crypto market right now. I don't understand the narratives. All the narratives that people tell me, they're absolutely not bulletproof. Do you remember the numbers on that Max Payne theory that were thrown up? What were these limits? I can't remember who put that up and what the details were. I tried to
Woody.
find it. Udi, do you remember the numbers, the limits that he put up there?
I roughly, not very specifically, but he said, I think max pay. If you think this is max pain is Bitcoin dumps to 20, goes to 40, dumps to 16, and then goes up. I think so. We go down, you go long, or now you sell. When we go until 40 and everybody thinks, okay, next bull market is confirmed, you go in and then we dump to 16. And then you kind of panic sell, and then after that we're going into the next bull run. But the market kind of has that tendency to really mess with you and really fake you out, sniffs out all the leverage, and lets you guts you out, and leaves you in the ditch. But yeah, right now it all seems too easy. It seems too clean. I get where you're coming from, and all the people that say this is a bull trap, I get where these people are coming from, because it's just so it's too clean. It's if we're going up from here, that it didn't feel like the max pain was really here, and usually people really need to suffer, and this bear market didn't really seem like all too much suffering. Of course, we saw like at around 80% drawdowns in most assets, especially within crypto. But the interesting thing is, especially if you look at 2022, risk on assets actually did not sell off that crazy. Most of them did 20-30%. Of course, tech sold up a bit more. But, and here is the but, what most people in crypto don't realize is 2022 was actually the worst year since the 60s, because a large majority of people, especially if you have a managed portfolio by a bank, you have a 60-40 portfolio. And there is only a very few numbers of years where both bonds and stocks sold down on the same time. And for a 60-40 portfolio, 2022 was the worst year since the 60s, because both normally they hedge each other. When stocks sell off, you go into bonds and you kind of level this out. But last year, that wasn't the case. So everybody that held a well-diversified modern portfolio, 60-40 or more bonds, so the pension guys, the boomers, that they suffered the most. Here in crypto, if you talk to people, and sorry if I say so, most of you guys are all in. Most of you guys don't hold a single bond. Most guys don't hold an ETF or anything. They're like tech stocks, Tesla, crypto, and mostly all in. That's a little bit of the millennial Gen Z way to invest.
What happened? Can't remember. You are way more on the game. With this one guy that was like betting short since whatever, since I think the last year or something. Is this guy out, or what happened there?
So he came back. Crypto are we talking about?
What's
And
a crypto couple? Okay.
Yeah. He left the market in February last year, so about a year ago, and he said, "I'm short." And he was very consistent. So he said his theory is going to be invalidated if we break 25,000 to the upside. And if we broke 25,000, of course,
We did.
then he came back to Twitter after like a week or 2 or 3. And he posted a tweet and he said, "Yeah, I'm still thinking we get more downside. So I'm still out of the market. I'm still waiting, still not buying." That's an update he gave like 2 days ago.
Not very consistent, huh?
Exactly. I actually commented on that tweet and I said, this is the best example on how to not do trading. If you're doing trading, you make up your thesis, you say,
but how does he explain that? Like, how does he explain him? Like, or does he not give a reason? Is he just like, okay, fuck that? Like, I still think I'm right, you're wrong.
He actually brought up the point that you brought up as well. He says it's highly manipulated with BUSD, Binance stablecoin, and USDC. He brought up the stablecoin issue, and he still says this is a bull trap, and there is more downside to come. There's not a clear argumentation. He bases his things usually on technicals, but he's not very active the last month or so. He comes back every 2 weeks to give a short update. Yeah, I understand why as well.
I mean, again, I do agree, right? That there's, I don't know, there's something iffy. But would I bet my money on this right now? That's just the crazy part, right? And yeah, I don't know. Yeah, I really think right now, if you have too little exposure to crypto, you may completely get your skim ripped off. I stand by that. I've been saying this every single week. I think if you have too much into crypto right now, you may also get your skin ripped off because, yeah, who knows? It's just absolutely bonkers on what's going on as a whole. Um, yeah, I don't know if you want to add anything here. To me, right, a couple of things that I just want to point out, right? Absolutely none of the fundamental economic problems have disappeared. None of the crypto inherent problems have disappeared, right? We still have the Binance issues. We still have digital currency group. We still have like a potential conversion. What actually happened? Let me check. What happened to the GPTC discount? Discount.
It's still like 50%, and we still have Mount
That's just
Gox. We still have
fucking insane, right? I mean, that if that discount is, yeah, that discount is still super low, right? It's like 40%. I mean, that's just insane. So if that GPTC conversion happens, it's like it's gonna sell off Bitcoin so aggressively. We still have Mount Gox, right? We still have Ethereum unstaking on April 12th. I know that a lot of people say, this is not going to happen. Like, there's not much selling happening because if people were to sell, they could have done this via liquid. That's just not true because, like, if you stake your own ETH, how are you going to get liquid? Like, how is this going to work? It's not going to work, right? This makes no sense. So, I don't know. And then, sure, maybe the amount of staked ETH goes up. I get it. But that's not the question. That doesn't define the price. What defines the price is supply and demand of ETH, not staked ETH. That's irrelevant. And I don't know why people trick each other on this. I don't know. I hate nothing else than being intellectually dishonest. And sadly, like, yeah, it's so easy to fool people with these things. And since, I don't know, people don't pay attention, their attention span is not much in general. People just want to go with what their tribe is saying, right? And yeah, so I don't know. I wish I had a better idea at the moment. I don't, and I'm honest about it. And I'm just like, people I talk to have so conflicting opinions, and I see something like I see obvious faults in these opinions right away, right? And anyone that kind of asks basic questions does, and so it just highlights that, I don't know, either all these ideas are true at the same time or all these ideas are wrong at the same time, and we just haven't figured out what the best thing is. Yeah, if, like, to be honest, if what's to me the most likely scenario? To me, the most likely scenario is people selling stable coins that pumps mainly Bitcoin because most people will go stablecoin to Bitcoin. It's the most liquid pair. So that's the reason why Bitcoin is going up. At the same time, this narrative of, banking is crashing, which forces people to sell Bitcoins, or what was the reason, is spurring a narrative of, look, you need to go into Bitcoin because of the banks, which makes no sense. It's actually the stable coins. At the same time, people go into gold, which to me is what institutions are probably going to do right now. I don't understand the argument on why institutions, and I mean, institutions are not doing it anyways, but why would institutions go into Bitcoin right now with everything that happened over the last 12 years? Institutions are scared shitless in the crypto space. Whoever institutions I speak to, they are really, really scared. They're all super interested, like 100%, but they are scared because of the last 12 months. So that to me is just very tricky. So yeah, and then on top of that, you have that liquidity hope, and that explains why risk on is happening. I don't know. I feel that is a bit of more the narrative, and so the big question comes: when do people stop going out of stable coins? When is that going to stop? Because to me, that seems the main buying at the moment. And what happens tomorrow? I don't know. That's probably my question. And since I don't really have a good answer to either, I stick to my original plan. But yeah,
I want to add something, which is
please.
going to be the most dominating thing and narrative over the coming year. And I would be willing to bet a lot of money on this. And I remember 2018 and 2019 very vividly because I was down on my investment a lot and I didn't know, is there light at the end of the tunnel? Will there be another bull market? And the consistent narrative, the most asked question in 2018 and 2019 is, when alt season? Why is Bitcoin pumping? Why is this going up? Why is this not going up? Is this project still viable? Does this project still have a future? And so on. This was the most asked question. And I can tell you one thing. If history is going to repeat itself, this will be the theme of the year. Bitcoin is going to go up or down, and people are going to asking, why is project XY, why is this not pumping? Why is it only Bitcoin going up? And usually it takes Bitcoin almost needs to be back at the all-time highs for alts to pick up again and for the whole space to really fly again. Look at most altcoins, how they performed in 2018 and 2019. There was like a period of 1 year where there was no volatility and the price was just going sideways before everything picked up steam again. And most people cannot remember or were not around back then. But usually in this volatility period before Bitcoin goes into the direction of a new all-time high, it's very, very boring in the altcoin sectors. There might always be this 1 or 2 coins that are the exception. But for most of them, there is just a period of boredom coming. But, and here comes the but, this is where the diamonds spread from the junk and the real building is happening, where less pressure is on developers, where projects actually survive and thrive. But from a price perspective, it usually takes until Bitcoin goes into the direction of all-time highs again for the whole space to start flying again. And I can already see here in chat, if you scroll down, there is like 5 or 6 people were talking about exactly that. When altcoin season, when are altcoins going to pump, and so on. So this is probably the discussion or the topic that will be with us for the rest of the year.
Yeah, I mean, I agree. But I mean, it's not only this year. I mean, this discussion of, I think at the moment, Bitcoin is, where's the dominance? It's relatively, let me just create. We need
47, 48%.
Okay.
So
yeah,
down, up 20%.
I just look at the, I need to use something else other than CoinGecko for that. Bitcoin dominance is, where's Bitcoin dominance?
48% right now.
Yeah, so that's definitely on the higher end, max. Yeah. Yeah. Definitely on the higher end. I think it hasn't been that high. Actually, it hasn't been that high since we have seen that bull run. April 26th, I think. Oh no, here there was one dip here. That was June last year when all hell broke loose. That was the similar kind of okay. Wow. Yeah, I mean, yeah, interesting. Okay. What is your expectation for tomorrow's Fed meeting?
I still think so. Jay Paul, his idol is Walker, and he wants to be Walker. He's gonna hike. He's gonna hike 25% basis point, and he still thinks he's gonna be able to hike in May or in June as well. He wants to bring inflation down. He's committed, and he's gonna hike. He's gonna hike 25 basis points. I would bet my money on that.
Yeah, I don't know if it has anything to do with Volcker, but I just think that he says, I mean, if I have to do anything emergency or something, I can always do it. I always have other options. If I do anything else other than hike tomorrow and then stop the quantitative tightening, I'm going to signal that there's weakness. So I'm just going to signal everything is fine because I can cover it somehow anyways. That's just, in my opinion, same game plan as the EU did, the ECB did with their 50 basis point hike, and I don't know, a few days later, or I think during the entire crash, Credit Suisse collapsed. How does this make you feel as a Swiss? I don't know. I always feel like talking to some of my friends from Switzerland. There was this very bipolar kind of Credit Suisse versus UBS, kind of that duality, and some were like, oh yeah, it's UBS all the way, and others are like, oh no, it's Credit Suisse, or some are like, it doesn't really matter.
I don't know. It kind of makes me sad a little bit. And what's even crazier is that in 2009 or 2010, the Swiss government saved the UBS. So the UBS had a very similar fate than the Credit Suisse just 10 years or 12 years earlier. and now they are the ones that kind of survived with the help of the government, and they're taking over Credit Suisse. It's very, I don't know. I have an Austrian approach here. I think if something is badly managed, if that was bad risk management, if something is blowing up, let it burn down, and let it make room for new things. But yeah, I guess it was too systemic, 1.4 trillion assets under management and worldwide, and all of these things. So they couldn't really do that. But the same thing in you said it would make the Fed look weak. And I fully agree. I couldn't have said it any better. But I already think the Fed looks weak because they backed the deposits. Uh, Probably it would have been better or a stronger move if they would have let Signature and Silicon Valley fail. But yeah, it's just me because I believe if there is failure, there shouldn't be a bailout. It's my personal thing.
I shared this last week. I would have loved for Silicon Valley Bank to fail and the government not stepping in. I 100%, however, see the issues with that. I really do. I would see that then everyone is gonna run to their small bank and that's just gonna be so tricky and dangerous. Um, yeah, that is such. I don't know. That was a. I know. I also thought, for example, very interesting on the Credit Suisse one where the government said we're basically bypassing shareholder vote. This is of national security. Shareholders have no vote on this. Quite interesting. So, um, yeah, because there's also, I mean, imagine, right? The property rights basically got completely skipped there. Quite interesting. I really think for like, I don't know. I always thought Switzerland is one of the last countries in Europe that really kind of respected those things. And I understand why they didn't. I'm not saying I don't understand it. I really do. It's just, yeah, it just shows extraordinary situations gonna require extraordinary measures. So never say never.
Let me offend a few Swiss people here. So I'm from Switzerland. I have a Swiss passport, but Switzerland is in real decline since Barack Obama, since the financial crisis. Like they gave up the bank secret. They put sanctions. They broke their neutrality against Russia. They put in government bailouts in a great financial crisis, and none of this should have been done. Switzerland would be in a much better place than it is right now. And also, they're consistently putting down their own currency. The Swiss franc would be much stronger than it is right now, but because Switzerland is in this sea of European Union, they kind of need to devalue their own currency just so export and tourism doesn't go down. But Switzerland has become increasingly weak. It's still the best place in Europe by far, but they're kind of acting weak. There are a lot of weak politicians, like our strong politicians that we used to have in the 80s and 90s and early 2020s. They're no longer, but that's a worldwide problem. So sorry to shit on Switzerland here, but I really love Switzerland. I love my home, and it's still a great place to live. But I just think they should have been
Fabio, I
signaling more
actually need
strength.
to really jump out of this call right now.
Okay, Julian is getting a phone call and his audio broke up, so I'm gonna take over. Yeah, I'm very sorry. Like, I really, I love Switzerland. Don't get me wrong, and but maybe I can share a few thoughts on what is going to happen. So I really can recommend two things if you wanna double down on your knowledge when it comes to the 1 million Bitcoin bet. There was a Twitter space with Robert Breedlove, Alex Gladstein, and Balaji. You should listen to that. It's about 1 hour, and Balaji actually makes a great point. And then there is one more thing you probably want to listen to, and that is the podcast on Anthony Pompliano with Raul Paul. That was done 2 days ago, I think. And Raul Paul, while I disagree on a lot of his takes when it comes to, he shilled Luna and he had a few bad investments over the course of the last 2 years, he's still a great macro guy. He worked for Goldman Sachs, he has 30 years of experience and so on. And he's definitely a guy worth listening to. And he makes a few great arguments in the podcast with Anthony Pompliano, just from a bird's eye perspective, what he sees happening in the market. I think, I'm not 100% sure, he either expects a pause at a 25% basis points with the Fed meeting this week, but he really feels that the Fed is about to cut emergency rate style, like 100 basis points or 300 basis points in a later course of this year. And I can really understand where he's coming from. The interest rates are so high right now that all of these locked in products that the banks hold right now is not sustainable for the future. So it's going to be super interesting. And the most interesting thing for me to follow, and I guess for everybody in this space, is Bitcoin never experienced a real financial crisis, like a real recession or a real depression, like on maybe, like 2001 or 2008. And we still don't really know how it is going to behave. As always, as you have with gold or with other assets, usually when these things start, there is a liquidity squeeze, a liquidity event where everything sells off. Like March 2020 would have been the best example of this. Gold sold off, Bitcoin sold off, crypto sold off, stocks, everything. But in the aftermath, you have usually a decorrelation. So some assets, they keep dumping, and others, they pick up steam. Usually, just from a historical perspective, gold is the first to pick up, and has, after a recession or after a depression, it has usually 2 or 3, sometimes 4 years that are really, really strong. And while stocks are still down. And I'm really interested in how Bitcoin is going to behave in a scenario like that. And we just don't know yet. But I think we're about to find out in the course of this year. Yeah, sorry for the instant takeover. Julian turned off his camera, and he's in an important phone call right now. We still have another 5 to 10 minutes to go, so I'm going to give him the chance to come back. Otherwise, I'm going to jump into the YouTube comments for a second and try to answer a few questions there. So Twitter is 60% up compared to pro investors, and somebody will be wrong. No, Twitter, the company, is private company right now, so I'm not sure. Answer the questions, Fabio. Okay, where's the question? So Julian, you say it is not the 2020 scenario with the heavy money pumping right now. I'm not sure on that. Altcoin season is always after a decent Bitcoin pump, says Mohammed. Yeah, usually. But if you look at 2018 and 2019, look at altcoins like, for example, Stellar or XRP or Cardano, like top 10 altcoins that were like really the top in 2017 bull market. They had a period of like a year where they're just going sideways. So they dumped for 90%. They had like these really crazy valuations. They dumped for 90%, and then you have practically a flat line for a year. And while this was happening, Bitcoin has had its ups and downs, but these altcoins mostly stayed flat. Of course, there was a bit of up and a bit of down, but they picked up steam in late 2020 when Bitcoin was going into the directions of all-time highs again. And most of them, like for example ADA, they really excelled in 2021 when Bitcoin was already in making all-time highs. And probably this time it's not going to be different. So I wouldn't expect altcoins to pump greatly before Bitcoin is moving into the direction of all-time highs. I know that a lot of people hope that this is going to happen, but history is just telling a different story. I also don't believe in an altcoin rally until narratives change. Right now we probably just need to have a lot more people coming into the market, and usually these things are connected to price. Most people come in when the prices are really taking off and exuberance is taking over.
Okay, I'm back.
Now it's different.
Let me dial in again.
Well,
sorry, everyone. Okay. Fabio hopefully helped.
What else? Julian, but shouldn't you separate a little more crypto and Bitcoin?
Fabio, I'm back.
Oh, Julian is back. Oh, wait, he requests to speak on Twitter. I'm going to allow him.
Can you add me to the space again?
You can speak now, Julian.
You need to add me to the space. Okay. I am back. Sorry about that. Can you hear me? Okay, good. Sorry. Sometimes I was expecting a call Actually, a bit later, not before 7, but that was a call I really had to pick up. Business related. So, what did you guys talk or just answer questions?
I was just babbling random stuff. No, nothing of clear
Yeah, I completely
essence of
left you.
importance.
I know I left you completely lost, but I mean, I had to pick this call up. It's like absolutely crucial. It was about 2 decisions that I really had to make. I was expecting this after 7. So, sorry about that. Um, yeah, I don't know. Do you want to close it up here? Anything else that again? Okay, maybe my scenario. I also see 0.25%. I see the quantitative tightening going on tomorrow. Why I believe the Fed doesn't want to show any weakness in that. I think the bailing out, except for probably the crypto hardliners, most people will probably agree that the bailout was necessary. I do think that even out of those 90% that believe the bailout was necessary, probably 50% of them are going to say it's unfortunate, and I belong to that group. However, I did see the potential contagion and all that. And the other 50% just, I don't know, just love when stuff gets bailed out because for some reason it's not their money. They don't feel it's their money, and so the bailout for them is free money, which makes no sense. If they do that tomorrow, I do think there will be a bit of a retracement in crypto. I don't think it's going to be a big deal, really not, because the big story is still going to be that liquidity on the balance sheet. I just think the rally is not going to continue. But that's just my take. I don't know. What do you think if they're going to do 0.25%?
I would say 0.25% priced in and pause, pump.
Yeah, I agree. I really agree. Um, Great. With that, wish you a beautiful Tuesday. I don't know if there's anything else, Fabio, that we need to address.
Just one thing. So we have a new product at Cake Elite, and most of you have probably already heard. You can see it on socials. We send out an email. You can see it in the app and so on. If you haven't heard about it, definitely take a look at it. And you might have some questions regarding the product. So we're doing these podcasts, Cake Lives, on a weekly basis on several platforms. We do them on Spotify, on podcast, on YouTube, on Twitter. And last week's episode was Julian alone talking about 40 minutes or so about Cake Elite. And it was one of our best videos. We have a lot of views on YouTube on that because it's a really great explanation on the product. He goes into the details of every single bit, and he's kind of giving you the roadmap on where we are taking this product. Because it's just a minimal viable product right now, there's a lot of other things coming on top of that as well. But you kind of want to be an early adopter of that product because it's going to leave you with some perks that others might not enjoy. So if I can speak out one recommendation, if you go onto our YouTube channel or on Spotify or wherever you're listening to this, listen to last week's episode if you haven't done so, and really get familiar with the product, Cake Elite. It's a super exciting product, and you probably should use it.
100% agree. And yeah, not going to add much more because I really need to get out. I have another call right now. So thanks, everyone. Appreciate it. Have a beautiful Tuesday. Fingers crossed for tomorrow. All the best. And yeah, see you in our next lives, updates. If you haven't done so, subscribe, and then see you next time. Thank you so much. Yours truly, Julian and Fabio.